Hello everyone, welcome back to my channel Learn Math with Preeti, and the topic for today is money and finance. So the topic is money and finance. Okay, as an adult, when we talk about money and finance, so we only know about earning, saving, and all. But as kids, money for kids is like getting money to buy something or spending money on whatever you like, right? So everyone know what is money or what is finance, right? So there's no need to explain this topic. The topic is self-explanatory. But what comes under this money and finance? What are the important things to be studied when you have to study about the finances, right? So first thing, when we start study about money and finance, the first thing we need to understand what is the gross earning. Okay, gross earning is considered as the total earning of a person. So when a person works, he also earns something in return, right? He earns money. So whatever is the total earning of a person is called as the gross earning. But that doesn't mean that this gross earning is the earning which he or she gets in his hand or in her hand. Okay, the amount which the person gets in hand is net pay, not the gross earning. Because when someone works for a company or some anywhere, that person gets a gross amount, but in that gross amounts there are certain deductions in the name of PF or taxes or whatsoever. So there are some deductions. So whatever is the gross earnings, there are some deductions from that earnings, and whatever you get in hand after that is called as the net pay. So net pay is gross pay minus the deductions. Okay, so from the gross earnings, whatever is deducted and then whatever a person gets in hand is called as the net pay of that person. So two very important terms: gross earning, it is an earning, total earning of a person, but it is not that earning which a person gets in hand. Person gets net pay. How do you find out net pay? We just subtract deductions from the gross pay and we get the net pay. That is the amount a person gets in his or her hand. But sometimes the net pay also has some additions. Additions as in sometimes the someone works hard or extra or more extra than whatever is required. So for extra amount or for any other thing, for doing a good job or as an appraisal, you get a certain extra amount that is called as a bonus. So if you get a bonus, there will be an addition to the pay, addition to the net pay. What you used to get every month, there will be an addition to that. So then that will become your pay for that particular month. Okay, so bonus is some addition which can be made some or the other months, but deductions are done every month. So first, gross earning is the total earning, net pay is gross pay minus the deductions, and if a person or an employee is working for extra hours, he or she has to be given a bonus. That amount is added in the net pay and the person gets it with the extra amount. So now this is very simple. So just we'll take up a very simple example also to understand, just so that we understand what is actually net pay or what is gross pay. Okay, so I'll just consider Ella as gross pay. So her gross pay is $203 and she's paying some amount in tax. So if I say $54 in tax, she's paying, and also she's paying $18 towards her pension, for her pension. So now what will her net pay be? what will be her net pay? So as I told you, net pay will be the pay after the deductions from the gross pay. So the total pay is, so net pay will be gross pay minus deductions, right? The gross pay is 203 minus, she is paying 54 in taxes. Also she is paying for her pension. So what is that which she will get in hand is $131. So her net, Ella's net pay will become $131 after the deductions of taxes and pension. Just understand or just see if she is working extra. So if she is getting any bonus, if at all, then that amount will be added in this net pay. Okay. So I hope this very simple concept of net pay, gross pay and bonus is understood. Okay. Now when you talk about money, money is in every place. Whether you work, whether you are in a bank, wherever you go, where you travel by a train, you travel by a plane, you travel by an auto, wherever you go to buy, you go to mall, you go to a cafe, everywhere money is required, right? So money, when money comes into picture, there are two most important things also which comes into picture with money only. Okay, so they are the selling price and the cost price. Okay, and that also includes profit and loss. Now for what, first we'll understand what is selling price. So goods are sold at a certain price. Okay, goods are sold at a certain price, that is called the selling price of that good, right? But the goods which are sold are also brought, right? So they are also brought. So goods are brought also at certain price, right? So when the goods are brought at certain price, that is the cost price, and they are sold, that is the selling price. So while selling, that is the selling price of a good, and when someone buys, that is the cost price of that certain product. Okay, now depending upon the cost price and selling price, a person earns a profit or has a loss, right? So how do you understand that? So now when the seller is selling something, either the seller will make profit or loss something, right? So how do we understand when does the seller makes a profit and when does the seller makes a loss? So profit is only made if the selling price is greater than the cost price. That means if a person is selling an item for more amount than what he has purchased it. So just, I'll give you an example. A person is selling, I guess, caps. Suppose he's selling caps. He's buying a cap at 25 and he's selling at 50. So he's making a profit, right? So he's buying at less and selling at more. So that is a profit for him. So what is the formula for profit? For finding out profit, we do selling price minus cost price. And profit can only and only be made if the selling price is more and cost price is less. Similarly, not necessary every time the seller gets a profit only. Sometimes he or she has to sell at a loss also. When does he or she get a loss? When the cost price is more and the selling price is less. That means if a person is buying something for more and then he has to sell it for less. So the formula for loss is cost price minus selling price. For this, for loss, the very simple examples, we all buy cars, right? So when we buy cars, we buy at a very high rate, right? But once the car is being used and then you want to sell it again, obviously it will be sold at a low rate, right? So what did you get? You incurred a loss. You used that thing and you got a loss because the cost price will always be more for the car than the selling price. No one will buy a second hand car in the price which you more than what you have brought it, right? So at that time we get a loss. So I hope profit and loss. What is profit and what is loss is clear. Selling price is greater than cost price, then that is profit, and when cost price is greater than the selling price, that is loss. Okay, now let's take up one very simple example for also understanding this profit and loss. So suppose a shopkeeper is buying just 72 bars of chocolate, okay, and at for $5.76. Okay, he's buying total 72 bars of chocolate for this amount, and now we have to find if he makes a profit or loss if he sells them for 12 cents each. So now he has brought 72 bars of chocolates together, but he's not going to sell everything together, right? So he's selling them at a price of 12 cents each. That means he's having 72 bars. So the selling price will become 12 cents into 72, right? Because he's selling 72 bars. So that will be 8.64 cents. We'll just convert it into dollars. That becomes $8.64. Now if you see, this is a selling price and the cost price which he has brought the chocolates is 5.76. So what is more? The selling price is more than the cost price. As I told you, if the selling price is more, it's always going to be profit, and if the cost price is more, it's always going to be loss. Now selling price is more, so it will be a profit. So we will write selling price minus cost price. So that is 8.64 minus 5.76. Though the answer is $2.88. So very simple example to understand actually how to find profit. Okay. So after this, we will just take up one example also for the profit and loss also, but not necessary that always profit or loss is asked. Okay. Mostly they ask find the profit percent or the loss percent. So not necessary every time they will ask find the profit or loss. So normally we talk about how much percentage profit did the person get or how much percent loss is there. So when they ask you to find profit percent or loss percent, what do we do? What are the formulas? First thing we understand, whenever we have to find percentage, we have learned this in our video of percentages. I've clearly told when we have to find percentage, we always multiply it by 100. But now we need something, some number or some fraction to multiply by 100. So let's see the formula for profit percent. So when we have to find out the profit percent, we will take profit upon cost price into 100, and same for loss percent. In place of profit, we will take loss upon cost price into 100. Okay, so for profit percentage, we will take profit upon cost price into 100. For loss percentage, we will take loss upon cost price into 100. These are the two formulas. As I always told, when we have to find percentage, we always multiply it by 100, and that is what we have done. Now so we will just take up example also for the same. Okay, so now the cost price of is given 4,500. Okay, and the selling price is given $4,005. Now they are asking us to find the depreciation as a percentage. Find depreciation as a percentage. Now new word, right? What is depreciation? Depreciate, something is depreciating means that is decreasing. Decreasing means loss. The value of something which is decreasing, this something which is becoming less over a period of time, that means depreciation. Okay, that is the meaning of the word depreciation. That also means loss. So we have to find the loss as a percentage, not only loss. We have to find loss as the percentage. So to find loss as the percentage, first we will find out loss, right? So what is the formula for loss? We all know cost price minus selling price. What is the cost price? 4,500 minus what is the selling price? 4,005. So the answer is $495, right? So the loss is $495. Now what we have to find out? We just don't leave the answer here. They have told us to find out the loss percentage. So we will use this formula and we will take 495 upon 4,500 into 100, right? And 45 ones are 45 11s are, so we get 11%. So the depreciation as a percentage is 11%. Okay, so the value is depreciating by 11%. So I hope you have understood what is profit. First thing, what is selling price, cost price, profit, loss, profit percent and loss percent. All these things are covered till now. Now also in money and finance, there is one more topic which we hear more commonly. Not only profit, loss, cost price, selling price. There is one more thing which we hear regularly, that is interest. Right? Now interest, we hear it more often. Bank ads and everywhere we learn about interest. Now what is interest? Interest is actually an amount which is an amount which is added by a bank to the sum deposited by us, or sometimes it is also added to the sum if a loan is taken by us. Okay, so interest is the same thing, but it applies differently in both the cases. In the first case, as I have told, amount is added by the bank to the sum deposited by us. So everyone has a bank account, right? And we deposit some amount in the bank, right? So whatever amount is there in the bank approximately gives us an interest yearly for keeping that amount in that bank account. That is what is called interest, that is given by the bank. On the other hand, interest is also applied if you are taking some amount from the bank as loan or something. So the bank takes interest in return of it, because bank is helping you out, giving you money in advance when you need it. So you have to pay a certain amount of interest every month to the bank yearly, so that the bank can provide you funds. Okay, so this is what is interest. It is the extra amount which is added to the sum deposited by us, or it is also an extra amount to the sum if we have taken something from the bank. Okay, now interest is also of two types. Okay, so if we talk about interest, we have two types of interest. The first one is the simple interest, and the second one is the compound interest. Okay, so we'll learn one by one both of them, what is interest and how do we use it and where do we use which interest. Okay, so first let's start with simple interest. So if we start with simple interest, now as we all know what is interest, to understand interest we know extra amount. What is simple interest? Simple interest means the interest which will be given every year. It will be the same for every year. There will be no change in the interest if the amount is same. Okay, so now let's see the formula. Simple interest formula is PTR upon 100, where P is the principal amount which you have deposited or taken, both at the same time. Okay, T is the time is generally taken in years. Okay, R is the rate of interest. Rate of interest, that is per, it is written in percent per a. Per a means per annum, means the interest is calculated on a yearly basis. Per annum means per year. So the interest is taken on the yearly basis, not on monthly or some other base. So they calculate the interest on the amount we have according to an entire year. So this is a formula, and SI is nothing but the simple interest. So SI is equals to PTR upon 100 is the formula to find out the simple interest. Not only simple interest, if simple interest is given and you have to find out principal or time or R, any one thing from that, we use the same formula. So I will take up an example in which we will not have to find the simple interest but something else. Okay, and we will use the same formula. We'll do it here only. So example, so principal is already given, of course, 750. Then simple interest is also given, $180. Then time is 4 years. And the rate of interest, we don't know. We have to find the rate of interest here. So again, you will use the same formula only. They mean to say that the amount deposited or taken from the bank is $750 and the interest paid by the bank or is $180, and the time for which the amount was kept is 4 years. We have to find how much rate of interest has the bank given or taken. Okay, so we will take the same formula. Simple interest is equals to PTR upon 100. So simple interest is already given, so I will write 180 is equals to 750 into 4 into R upon 100. We'll shift everything over that side. So this will become 180 into 100 upon 750 into 4 is equals to R. Okay. Yes. Then here we get amount as 6% per annum. After solving this, we get 6% per annum. That means they have given or taken the rate of interest as 6% per annum, means per year. So the interest is taken as 6% per year basis. Okay, so this is very simple. Now there can be sums in which rate of interest will be given. Suppose 6% is already given and time will not be given. You have to find out time, or sometimes the principal only is not given, everything else is given. So you will use the same formula only for everything. So if I'll just show you here, if the principal is not given, the formula will remain the same. If you have to find principal, you will just write P is equals to SI into 100. This moves there and TR will move here, T into R. Right. So same formula you will apply if T is not given. So T will go here and P will come here, and R, so I already told you. Right. So the same formula is used whether you have to find simple interest, principal, time or R. Okay. So this is all about simple interest. Okay. Now there was a second type of interest, right? That is, second is the compound interest. Okay. Now what is compound interest? As I told you, simple interest is the interest given on a certain amount which stays always common. What is compound interest? So compound interest, it is an interest that you earn on interest. I know it's a little, it is an interest which is earned on interest. What does that mean? It means that that is an amount which you not only earn on the main principal amount but also the extra interest amount. So I'll just explain this with kind of an example. What kind of an example? Suppose someone has deposited $100 in the bank. So for the first year, he is going to get 10%, okay, as the interest. So 10% of 100 is always 10, right? So that means in the second month start, the amount in his or her bank will be $110. Okay. Now if it was simple interest, he will again get 10% only in the second month also, because the interest is already calculated for the entire time period, and the interest is always the same. But in compound interest it is not the same. Okay, now compound interest, what do? They calculate the interest percentage on the new amount. Now the new amount in the bank is 110. So now the new amount is 110. So they will take 10% of 110. And what is that? What is 10% of 110? It will be 11. Right? It will be 11. So the new amount in the second month will be $121. Okay, it will not be $120. If it would have been simple interest, you would have got again 10% of 100 only, that is $10 every month. But here if you see, first month he got $10, second month 11, and the third month it will increase again, right? Because it will be the, so if you see in the third again it will increase, because it will be the 10% of the new amount, that is $121. Okay, so that is the difference between simple interest and compound interest. In simple interest, the interest would be same throughout, 10%, right? Throughout the year you will get the same 10%, that is $10. But in compound interest, if you see, in the first month you got $10, in the second month the interest is increasing, because the bank is paying us the interest on the interest also. So that is what is called compound interest. Okay, now we will learn the formula for compound interest is I is equals to P 1 plus R upon 100 the whole raised to n minus P. If you have to find interest, everything, all the terms remains the same. P is again the principal amount or the amount deposited or taken. R is again the rate. N, there in simple interest we write T, here we write N. N is the number of years, which was time in simple interest, right? Now here we call it number of years, because always the interest is taken per year. You cannot have months, so they call it number of years. Okay, so if you have to find in compound interest, we will use this formula, and if we have to find simple interest, we will use the formula which was given just before this, that was SI is equals to P into R into T upon 100. So let's take up an example for solving compound interest. So if they tell you to solve compound, find out the compound interest, you use the formula which I wrote just the slide before this. We will take up an example which does not clearly says it has to find compound interest, but which will explain the topic more better, that what is compound interest. A school increases its intake of students, right, by 10% each year. That means they mean to say that every year 10% students keep increasing. So if it starts with 1000 students, so how many students will be there in the school, will be there at the beginning of 4th year? Okay, now by this only we understand, by the question only we understand that it is compound interest and not simple interest. Why? Because they are telling that the school increases its intake 10% each year. That means it is, they are not telling 10% of 1000 each year, they are telling 10%, whatever is the total number of students, they are increasing 10%, means they are increasing 10% of the new number of students, right? So for that we use compound interest. But compound interest, do we have to find interest here? No, we have to find the total number. We only have to find the extra students? No, we have to find the total number of students after 3 years. That means at the beginning of 4 years. So we will consider our n to be 3, because at the beginning of 4 year, right, at the beginning of 4 year means only 3 times it is increased by 10%. The fourth time it is not increased, it's the beginning of 4th year, right? So our n will be 3, right? Here it's written 4, but very carefully we need to understand that they have told at the beginning of the 4th year, they have not told at the end of the 4th year. Okay, if they tell at the end, we will take our n as 4, but they are telling at the beginning of the Fourth year, that means 3 complete years. So we'll consider n as 3. And principal, we all know that is our 1000. And the rate is given as 10%. Right? So here we don't have to find interest actually. We have to find the total number of students. So we call it as amount. So we will just change the formula in place. The same formula is there. Just a slight change in the formula. In the formula there was minus p. We subtracted minus p. So when it's not clearly mentioned that you have to find the compound interest or you have to find the interest compounded annually, so you will not do minus p. You will just find the amount and keep. But if they tell that you have to find the compound interest or you find the interest compounded annually or you have to find the interest, then you will also put minus p here. Okay, but here we don't have to find the compound interest. We have to find the total number of students at the beginning of the fourth year, means the extra students and the previous 1000 students added together. So here I'll just take 1000. 1 plus rate is 10 upon 100, the whole raised to 3. Right, so this is 1000 into 100 plus 10, 110 raised to 3 upon 100 raised to 3. So if you solve this, we get 1331 students. Right. So at the beginning of the fourth year, the school will be having 1331 students in all. Okay. So I hope the concept is well understood. What is simple interest, what is compound interest, and also the concept done before this, that is profit, loss, cost price, selling price and all. If any doubts, please comment below. I will just solve your doubts and I will just give you a challenge question so that you can solve and comment the answer below. So the question is, a car is bought for $12,500 and its value depreciates by 15% per year. So calculate its value after first 1 year and 2 years. Okay, so please comment the answer below. I'll check the answer and I'll comment the correct answer only if someone comments the answer. Okay, thank you for watching. Do subscribe.